Nikunj has also got V. Ramakrishnan, the CFO at TCS, and Ajoyendra Mukherjee, the EVP and Head Global Human Resources, as well as Prateek Pal joining in. Nikunj, take it away.
Thanks a lot for that, Aisha. And let me now bring on board three more top brass members of TCS, Prateek Pal, Ramki, Ajoy. Gentlemen, Happy New Year and thank you for joining us.
Happy New Year. Happy New Year.
I can see chorus in the voice and strength in the voice. Numbers can do all this. So it's your first time on ET now, so thank you very much and great to connect with you.
Sure.
The retail vertical is growing. But some would argue that looking at the lay of the land, which is that there has been bankruptcy of a couple of players, Sears is the most important one. Can you come back and tell us that, look, the retail vertical will slow down because of problems?
See, if you really see, it is the most disrupted vertical. There's no question about it. But again, what I say, whenever there is disruption, there is spending. Has to be there. Retailers will not sit quiet and allow the online retailers to get away. So there is a huge technology spending happening. And Sears and like that, there will be some other retailers, which is a very short-term blip. And it will continue to happen. We will not say that it will not happen again. But I think we are very resilient, TCS, because we are participating in the spend where retailers are spending hugely. We are also with the right retailers who are really doing well. If you really see this holiday season, the retailers who have taken away business away from the so-called large online retailers, so they are our clients. Okay. So we feel very confident.
Just one quick follow-up. Is that the reason why we are asking you this retail question is because in the past when there was problem in the telecom sector, in the past when there was problem in the BFSI sector, at a macro level, it affected your business. You've given profit warnings in the past about Diligenta and other, other clients. But what you're telling us is that even though there's disruption in the retail space, some part of old retail is getting bankrupt, this will not affect your retail vertical.
Yeah, because we are seeing the spending happening. Okay. Because of that, we are getting the right confidence to tell you that yes, we will probably do very well.
Ramki, one of the large factors which acted as a tailwind for last calendar year was rupee. That may be a tailwind, that may not be a tailwind, but it has acted as a tailwind. In absence of any large currency tailwind, are you likely to maintain the margins or there is going to be a reboot in this 26 to 28%?
We don't see the need for a reboot of that preferred range for the simple reason that structurally from the investments we have made, the deep relationships which we have built over the years across segments in different markets. So you have a number of levers to work with. And second is increasing platform play or non-linear way of in the revenue portfolio. So all these are clear areas where we can definitely make sure that we continue to maintain that leadership in the margins, as well as to clearly be focused on our preferred range. Now this is where we want to do, and we will do what it requires to do that. Now in the short term, if we did see good demand, and we said that we should fulfill that demand. And in a little supply constrained market, especially in some of the markets, so you have some blips in a short term. But these are all part of, I think one has to look at it more on a longer time frame than just a single quarter.
Fair point, but my next follow-up question would be that we respect the fact that you're confident of regaining your margin band, but because of Brexit, because of currency tailwind, these are factors which are beyond your control. Can there be a downward bias in your margins for 2019?
See, macroeconomic we cannot predict, because any of those that can affect across your overall revenue itself. But that depends on what is the severity, which part of the world and which part of the economy gets affected. So that we will keep out. Currency again is another sort of currency. Rupee depreciation is part of our intrinsic model. So you are absolutely right. If there is no depreciation, or if it is very flat, that puts our strategy for the revenue, for the margins, and you need to make sure that more levers are really addressed. right? So currency will be a factor, no doubt about it.
Joy, you're the man of the moment. I mean, that single most important number which we earlier focused on was attrition, but this time we're focusing on hiring.
Very good.
I mean, it's heartening to see that you've hired in 7,000 versus 23,000. It's been a huge demand or a huge uptick in terms of the new employees.
Right.
Where is this visibility coming from, and how should we read into it, and will this trend continue?
Okay, see, this is coming straight from the fact that our business growth, as we are touching double digit, or we are already there in double digit, and I think as we have been saying, that there is no reason why we don't see this particular growth continuing, right? Given that fact, so in order to achieve that growth, you need the headcount and you need the kind of competency, and that is why the entire focus on developing the competency of our existing people, especially on the digital world and also on the agile way of doing things. So these are the two things that we have been doing, and participating in the growth and transformation journey of our customers. So that is primarily the basic philosophy that we have been following. So given that demand, we have to capture that demand. Yep. So this year we have been very strong as far as our total hiring is concerned, and we have hired on-site, we have hired, basically all across the globe we have been hiring. Hiring in US has been pretty high. And as far as next year is concerned, I don't see let's say if I don't take the last year into account, last year we had hired 7,700 net for the full financial year, and that time our growth was also 6-7% for the whole year in a CC basis, so that's the overall growth. Now, but years prior to that, our normal hiring has been between 25 to 35 in a year, so we are back somewhere in that range. And I think we will be continuing in that range as long as the business growth remains in this fashion. So
okay.
Yes.
Is employer hiring a lead indicator of which way business is moving?
In a way it will be, but at the same time it also depends on what is the kind of competency that you have developed, what is the kind of capability that you have already have, which you have not deployed. So both ways. So it's not exactly a full, you can't take the hiring to be a complete indicator, but it does give you some indicator.
Yes. Typically my understanding of the model is that when you hire, it will hit your cost first, then it will improve our utilization and productivity levels. Was that the lever what Ramki was referring to? That margins will come back because the utilization rates and productivity levels?
How we shorten the time between each of these steps, even if they are sequential. Sometimes they are not sequential, they are very much parallel.
So Nikunj is becoming an expert in all this.
No, just been covering TCS for so many years now.
So the whole business process and the steps, and how do you make it more and more efficient?
So the time, how you manage and crush the time is where the efficiency comes in, and that we have been doing it in many ways. So sometimes some of this hiring is also very flexible, so we will be able to calibrate to the extent what we need to do as well. So, but I think the overall thing is from the demand which is getting created on the back of what technology can do, our own broad capabilities which we have on the table, and also our presence in the multiple markets and with customers in each of these domains. So I think from a demand and from an opportunity perspective, I think it's very, very strong. There is no issue on that. How we convert that, how we execute that is what is key. And that we have continued to do it in the past, we will continue to do that, right?
Ajay, is it too early to get worried about a structural wage inflation coming back?
No, I don't think so. It's too early to worry about it, and the wage inflation, whatever we are seeing in the market at this point in time, is very much similar to what we have had earlier. So there is no specific kind of a thing that we can highlight.
In 2016-17, TCS told us that we are confident because we understand the client need. 2018 first half, TCS told us that we are engaging a lot more with clients and you will see the benefits. Will 2019 be benefits of engagement and the order book will only become fatter?
So if you see we do give out the total contract value nowadays, right? And it is increasing, right? Couple of things I think I will say to respond to you. See, number one is we are participating more and more in the client's transformation initiatives. And the reason is of the investment that we have made in digital or IP or platforms and the domain and the contextual knowledge that we have. And hence, if you ask me, because we are participating more in their whole transformation agenda, more than ever before, right? Just not the services part. I think the client needs are well understood and will play a much significant role in fulfilling those transformation agendas of
So
our
in
clients.
general for your clients, can I say it's no longer wait and watch, it is confidence and it is commitment? Are they using these words with TCS now, that we are ready to give you business, we don't want to wait and watch, we are confident? Is the word confidence, are you hearing the word confidence from your clients?
Yeah, so if you ask me if they are going to embark on the transformation program, are they confident to give us business? Absolutely yes.
Okay.
No question about it.
Ramki, just last question. 2018, there are multiple factors which supported your business. There was currency. There was large deal which started filtering through. Problems in LATAM, problems in Japan, problems in Diligenta, they also, got sorted out. Is there anything which could be at a transformation stage which could surprise us both on a business front or on a margin front or again on a vertical front? Because we got 3 surprises in 2018.
I think currency should not be considered as either a surprise or a positive or negative, because that's intrinsic to our business. But there are many areas where we have embarked on and we are enough still along where we can still leverage and exploit. So I think it's not all said and done. This is all that you have in your toolbox. No. Just to take examples of just the cognitive automation, Ignio for instance, we have had good successes, but there is a long way, a lot more which can be done, just as an example. So also on many of the products and platforms. So from a positive to look at which are the areas where we can do more and do more successfully than what we have been doing, I think there are enough stories across the board. Negative, macroeconomic, one can't make any judgment. A very strong appreciation of rupee, again, one can't. These are the 2 things which one can't predict out.
Barring macro concerns,
but macro concerns, I think going from what we have, there is only positives from multiple areas, and it is very clearly part of our.
It's great to hear that kind of confidence. If companies, they come and tell us that there are macro challenges which are beyond their control, you can't do anything about it. But when they come and tell us that there are business challenges which they are aware of, it always worries us. But in your case, you're saying that there are no business challenges. I'm tempted to ask you a quick 30-second answer. TCS has been doing buybacks. Capital allocation policy has been well documented. Whenever the SEBI laws permit, will this buyback be the new trend for TCS?
Our overall, we have said that we will give back at least 80 to 100% of our free cash flow.
That's what you're generating. What about the kitty?
No, it will be both dividends and buyback, as long as that, and any other instruments if there are. But as long as that opportunity is available, that will be definitely one of the factors in our.
Gentlemen, have a wonderful 2019 ahead. Thank you for joining us. And
Thank you.
Wonderful interacting with you. Hope to see much more of you going forward.
Sure. Thank you very much.
Thank you.